This is our Forex blog for May 17th, 2013, and because it's Friday, I'm going to do a quick one. But basically, this lets you see each currency index that we create ourselves, and it lets you see the trend very nicely. It lets you see the previous day's high. It lets you see with the Swiss here that is coming up and finding resistance. There's some selling here. In other words, when the Swiss pairs are hitting the highest high they made yesterday and they can't get over it, when it comes back into the range, this is a pretty high probability place to sell. Most traders who don't have this tool would have no idea that the Swiss is very likely to reverse here. And you can very easily see, trend line breaks on this. And so when the Swiss is very likely to go down, at least at hourly moving average, typically it finds support here like it does, and if it's going to go up again, it's going to. When it fails to and breaks down here, this is another high probability place to sell. And basically, at 6:30, you want to find a currency that's likely to go up. Well, the euro's up, but it's also kind of hitting a high here. At 6:30, the dollar pretty much was trending up. You can see the daily and weekly trend is super strong. It's finding support here at the hourly and breaks out to the upside. And it was already over the previous day's high by a pretty decent amount. So it's more likely to go up. And especially if you want to wait for it to go back up to the previous day's high right here and break out here at 7:30, that's fine too. You can see at 7:30 this one's just going sideways. But basically you would be looking to buy the dollar Swiss. So let's take a look at that chart. And you can use any time frame for entries. But at 7:30, if you look at the dollar Swiss chart, or maybe it was a little bit before that, but this one came down, found support at the hourly, went a little bit underneath it, came back above it. I like to buy when markets fail to act as support at the hourly, break down but don't really go down that much. When they come back up, typically they'll go back up. If you miss that trade, you have a nice little kind of flag wedge pattern right here. It makes a higher high here and has a nice little pullback. And usually when you have a trend and our perfect oscillator hits either the lower Bollinger Band or what I prefer is the -80 level, these are very high probability places to get in. So you have a very high probability buy here and here. And there's all kinds of other patterns on here. Nice little flag pattern right here where volatility is getting slightly lower. And I don't like to buy above the 2.0 band, but I will, usually 5 to 8 pips above it. But if you bought this breakout right here, it's likely to go up to the fib target. So you have your profit target ahead of time. You also have our perfect oscillator. Usually when price is above the 2.0 band and the perfect oscillator is at a +80 level, that's the end of the move. And you can see, it pretty much stalled out there and there. There is such a thing as divergence trading. This is more for advanced traders, but anyone who's used the MACD or stochastics for divergence, when you see, lower lows and also here, it makes this secondary high right here and here very likely high probability counter trend. And once you get short and the price comes down and it hits the lower band, remember that's kind of a buy signal when the trend's up, so you want to exit your counter trend. And by doing that, you can pick pretty high probability exits. Notice if you sold here or here, this is an excellent place to get out and flip and go long. You have a nice little double top with clear divergence here. You go short. Perfect oscillator is at the band and you get out. So you can trade with a trend and counter trend with this very well. And one of our tools, I haven't gotten over this very much for maybe even a year in our blog, but as far as counter trend, one of the nice tools that we have is the FX trend reversals. And you can see a counter trend signal here and a very powerful one here. Unfortunately, it's a little bit late. These are very high probability counter trend methods that basically tell you when the market's gone too far. And anytime they're above our 2.0 band or you see an extreme, this is completely different statistical based model than what our perfect oscillator is. It's completely different also than the containment band. So it's when multiple completely different tools all give sell signals, the market's up too much. And of course the 1.618 most of the time is about 70% to 90% accurate in being the pretty much the highest high. So you want to get out of your trend and trade counter trend at that point. Let's take a look at some other trades that we would have today. Let's scroll back. We'll put the demo trading on so that they'll all scroll back together. Pullback trades are very high probability. You can see the euro broke out above the previous day's high right here. The daily and weekly trend's up. It's above the point of control and above the hourly. Here you have a pullback with two areas of support, both the hourly moving average and the previous day's high. And it found support there and started to go back up. So 7 o'clock, pretty high probability one to be buying. Which one is weak at 7 o'clock? Well, this one is very weak, but it's above the hourly. If it breaks down right here, you might consider buying the euro versus the Australian. The CAD is very weak. You know, I would prefer to buy, or it actually at 7 o'clock you can see that the CAD has been trending down and it's done a nice little counter trend move up. You could get short this with your stop a little bit above the high. So at 7 o'clock you have a very high probability euro CAD. The euro is strong and you're buying it on a pullback. The CAD is weak. You're also buying, or selling this particular one on a pullback right there. So we're going to look at 7 o'clock for the euro CAD. And this is really showing how easy trading is when you have these tools. So on the actual chart itself, notice that the perfect oscillator is underneath the Bollinger Bands on it, and it's underneath the -80 level. So this is by itself very strong buy signal. But on the currency index, you know that the euro was likely to go up because it was at major support. All the euro pairs pretty much are at support. The CAD was very weak today and very likely to go down. The only drawbacks I see on this is, there's quite a few counter trend signals up here, which means, this thing might go up one or two more waves and then it's going to kind of run out of steam. So, you get into that trade here and your stop would be underneath the low. Typically, I'll get into a light position. If it comes back a little bit more, I'll progressively scale in, or if it goes above the bar's high, I might add to my position. It's above our upper band. Notice the extreme right here. I'm going to get out right here with my average entry. I'll just say is 85 here, out at 15 for a nice 20 pip move. And because it's at an extreme, usually what I do at an extreme is I'll start scaling in as it goes up, progressively. I would have a very small position on this because it didn't really go that much my way. And typically I'll scale out a quarter of the trade when it goes 5 or 6 pips my way. Another quarter of the trade when it goes 10, 15 pips my way. And, double bottoms, clearly I'm out. And also notice that at the -80 level, I'm out. And when it goes back up in double tops right here with clear divergence, this isn't, a great place to look for a counter trend trade. Usually once it's not able to make a higher high, you can expect a two-wave pullback. So one wave, two waves. And usually the fib target of the first wave is where you want to exit those counter trends if you can have the patience to do so. So you can see it came down here. I probably would have, in all honesty, got out of all the trade right there if I had taken the second one right here. But divergence is a very powerful tool. And one more example here. Anytime you see a rectangle pattern of multiple hours of low volatility, just choppy direction, when it finally breaks out, it's pretty high probability of going up, especially if the daily and weekly trend, and I don't have the monthly on this one, you can have the monthly on as well, very high probability to go up. So at 7.10 right here, you could also buy the pound CAD. CAD's one of the weakest. The New Zealand as well. We'll just briefly look at the pound New Zealand 7 o'clock. You can see 7 o'clock. This thing goes up 25, 35 pips, and then I'll just put on the pound CAD to end today's blog. 7:30. This one's kind of in a nice little sideways range right here. It's been trending up nicely. What's nice about this is that you can use our trend channel on this to draw a trend line, and then once you let go and you project it from the high, you have your profit target ahead of time. So This one's not the best trade in the world because the profit target is so close. But if you bought that little breakout right there at 7:30, you have the fib target of the last wave up. I would probably draw from here to here, which gives you your profit targets up here. And usually I do like to scale out when it's above the upper band. Notice we're at an extreme here, so I probably would have got out of half my trade here, and when it went up to that fib target, I would have got out of my whole thing there. And if you want to, again, another perfect example, clear divergence. We have actually a higher high on price with a lower low on divergence that's running out of momentum. It's just telling you that it's slowing down up here, and you can do a counter trend trade, and when it hits the lower Bollinger Band, you're out. And also notice, the trend lines right there. It's lower quadrants, very good place to get out. You make on the counter trend trade 10, 20, 30, 35, 40 pips on the counter trend trade. And this is one of the few examples where you make more on the counter trend than you did on the trend. But regardless, you want to trade. Our whole model is we trade with the trend until it moves statistically too far, and then we look to do counter trend trades. And if it's up really way past the bands, you'll typically get a two-wave pullback. If not, you can use a trend line as your profit target. You can use the hourly moving average if you have the patience to hold to it. It almost always will make its way back there in a couple hours. And you can also use the minus 80 level, which in this case, because it was up so much, it didn't work here, and it kind of found support at the lower bands.